Yes, hello everyone. Today we're going to be speaking about the entire market overview here of what I'm looking at and what I think is important to continue to look at over the coming days, at least, maybe weeks, for both Bitcoin and the broader stock market. So let's get right into Bitcoin here first. We have had this intense rally down from 16,800 up to 2,100 here, and one of the most important things to look at, in my opinion, when evaluating the market is always going to be market structure. And we had this continuous bear flag structure that Bitcoin was forming every few weeks, right? So we had this bear flag here. Then we had another one, a tiny one right here. And we had another one right here. And then as of recently, we had one more here. So it was just continuous, as you guys can see. There's so many. And then we were forming one up over here, which got broken to the downside. Now you could drag this down to here, but it was broken to the downside. And then you could say, hey, this is a bear trap. And we just skyrocketed. So this is the first time really that we broke this continuous bear flag structure since the first one, right? Since January. So that is definitely something significant to be looking at. Yet at the same time, the structure, we haven't broken any significant areas to change our bias to bullish quite yet. Now, the first structure to really break is here on the daily, and that is around 21,500, right? So right here. If we could actually break over this and then hold it, we actually have a rather significant break of structure, right? Because even on the weekly, this is the zone we have to break. And you can see that this close here was right up at 21,258, and then this close right here was at 21,258, 21,069, and 21,480. So we're slightly under it, right? So we haven't actually broken it yet, as you can see, right? So we haven't broken any significant structure. Sure, with the wick, this is a higher wick. As you can see, this wick is higher than the wick here, but I don't really tend to look at wicks, and I would recommend you don't either. For the time being, with just overall TA, it's better to just look at where price closes. Definitely look at wicks, but don't attribute any significant weight to them per se in these type of scenarios. So we have this insanely bullish action here into this wedge, which I posted on my Twitter, which you guys can find. I'll talk about that later, but into this wedge that is always like, if you find a wedge after such a bullish move, especially if it's a bearish wedge and it's not a downward sloping wedge. So if it were to have been like this and you had price action within that, you could have a lot more of a bullish view, right? Because if you had price action in here and it broke up, it's different than when you have price action sloping upwards. It just means that momentum isn't as bullish as it was over here, right? Because here you have that strong momentum that is continuing, while here it's trying to slope upwards, but it's just rather heavy, right? And then you get this type of mushroom shape or tower shape that is like this, and then it goes like this, and then it slopes down, and then it's like this eventually, right? So after that broke, I took a short here, exited most of it down here once we started seeing a bounce. You could continue to hold it. If you're holding this short, then obviously hold it as a swing trade, because the probability of us revisiting lows are very probable at this point. Simultaneously, we could definitely be seeing a bull flag, right? Since we are just ranging here as of right now, and we could definitely see, if we break this structure, we still have more significant structure. Not more significant than this per se, but more significant structure, so also significant structure up here ranging from 2400 to 2500, which I would be looking at as the next zone, that if we do flip this, that we retest this, at which my personal bias would significantly switch. I would think it's very improbable for us to see a low here and a retest here at that point. Now that's definitely still probable because of the macroeconomic state, which is completely dominating the entire market as of right now, and it's completely reliant on the Fed, etc. So it certainly is something to be looking out for nonetheless. Although overall, the further we get from this, the further we get from these lows, the less likely we are to revisit them, despite it being this like absolute parabolic move, right, of 20-30%. Just to see this drop again is another 30% drop, which just to me seems rather unlikely if we have flipped all these levels. Now, that's not to say that that can't happen. You take it one day at a time. You try not to predict this much further ahead. Although the reason for me saying that it is possible that this resistance here at 21.3 gets flipped and that we see a high of up to here is as follows. We'll dive straight into SPX, so then we have roughly the view here. The point is, if we fail this and we break this range down, we're gonna see practically immediately we have 18 maybe here. So this is like within 18 and 19, we have this rather range of support where we might find some footing. On the daily, there is no footing. On the 4 hour, there's a little bit of footing on both of these positions as well. So maybe somewhere in here we'll find some footing. I would expect, if any zone, it would be this one. But overall, this zone here, if we go back to the daily, the last pullback before the up move, which is right here, would be the zone I would be looking at to reaccumulate any longs rather than trying to fish for here. Now we do have this significant 1900 level that has served as support throughout the entirety of July through October, right, all the way through here. So maybe we do see something like a retest, fail, test here, and continuation. So these are the zones I would be looking at. That most probably is this zone and this zone, and you could be looking for a bounce around the 1800 zone. But overall, I'd currently be looking at 1900, top of the 2200 zone, and up to 2500 if this continues out of its range and flips this 2200 or 21500 level. But the reason for me stating that it's possible that we flip it, which if you look at the current price action, some of you might be like, hey, why would we even see any more bullish than what we've had? Why don't we get some type of consolidation or some type of retest of lows now? Well, the reason for that is because crypto has been holding up extremely well comparatively to something like the SPY, right? Compared to the broader market, we've seen great moves here on crypto, and they've held on to their gains extremely well. So we had a similar range, right? Just like BTC down here had this kind of, what I was calling a flag pattern, right? I'll just close ETH here. This kind of flag pattern or range or whatever you want to call it. I'm fine calling it a range. Right, so I'll just draw the box. Right? This kind of range that we were in, and SPX at the same, SPY at the same type of range that I've drawn out here as well. But I will just draw it like this, same type of range. Out of which we broke and set a new high. Now, we are currently retesting this high of this range, right? If we just range in red, right? We'll remove these lines for the time being. We got out of the range, retested this previous mitigation zone, which we can see here on, for instance, the 4 hour, which is essentially the last up move before the real down move, right? So we could argue that this was a down move, up move, down move, up move, down move. This gap is technically just a gap down, but the gap down is a significant area to me. And then the breakdown into the range. Whoops, it's fine. So we mitigated that zone, this gap here, and retested it, and now we're retesting the top of the range. Now, that might be slightly different for the US 30. As you can see in the US 30, we have the range here. We'll just draw it out as well. Oops. Draw out the range. Right? So we have the range, but we came rather deeply into it here. If we go down to the 4 hour, you can see that we're rather deep into the range, which is fine. It's just slightly weaker than the SPY is currently. But we can definitely see a bounce off the top of this range. And since we have this intense waterfall type of price action, as you see, it's just a drop. We haven't quite set a new lower high yet in order to confirm an actual downtrend. It's just this drop, and now we're kind of doing that. So maybe if this forms on the hourly, we'll have an hourly downtrend. Currently, we don't have an hourly downtrend quite yet. You could argue this is the downtrend, but not really. It's just this waterfall of price action. Same here on the 4 hour, and obviously on the daily, there's no consolidation yet. So I would be looking at some type of lower high and lower low to confirm that bears are in control and that there is bearish price action actually forming, rather than some big drop that actually had no significance. It's just a washout essentially of a bunch of traders. So there's still liquidity to be grabbed under this level. When a range forms, I spoke about this in this trade right here. I posted it on TradingView and I posted on Twitter, so you can find my Twitter. I'll talk about it later. I essentially just posted that the tight range serves a lot of stop losses above and under both these key levels, right? So that's liquidity 1 and liquidity 2. One side will get taken first and probably serve as a trap, after which we see a reversal to the actual direction, by which I mean this, the red line, right? So this was my, as I said, my bias is currently to the downside as the final direction due to fundamentals and broader trends. So I am seeing the market broadly come down to new lows, most probable here, right? I'd rather see this happen than this, and by rather I mean I think it's more probable that we see this happen than an uptrend continue to new all-time highs, essentially, right? And yeah, the reason for me saying that about the liquidity on this post is these type of ranges serve as really good liquidity, right? So you have liquidity here left and right, and one of the sides is going to need to get grabbed, or up and down rather. One of the sizes need to get grabbed first, or tends to get grabbed first before the actual direction. Now we also have this mitigation zone up here, and as you can see, what we currently did, if we just pull up the US 30 right next to it, that was on the 8 hour, so we're going to go up to the 8 hour. Right, I still have the liquidity marked here. You can see that the parallel of this and this is essentially exactly what happened. If we just play it out, we play out the price action here, we have essentially exactly what I wrote down happened to the exact T zone, except the fact that I highly doubt currently this wasn't supposed to be the exact prediction that we go down straight, since normally you trend down. So as I said here on the SPY, we're going to need to set a lower high before we see continued downside. So that's what we're looking at now, and a large part of both for the US 30, SPY, and Bitcoin is going to be dependent on the DXY, so the dollar strength index. The reason I say this is, well, it tends to be correlated inversely. And part of my issue here, why I do expect we see a little bit of a bounce still, and then we see a crash, is DXY is far overdue might be an overstatement, but we are a bit overdue on the DXY for some type of bounce, for some type of relief. We've had a downtrend here since October that has really not even put in a weekly bounce, right? You can see even in the most bullish price action we had here, we had these bounces, right? 1, 2, 3, 4. You know, you could argue here we have some, and they feel more bouncy than this does. This is it's not really even a bounce. Sure, you could argue they are, but not really, not quite like this, or like this, or even like this, or like this, right? We've had this, okay, fair. We've had the top one. This is essentially that, right? But not quite the point. The point is that we need to be looking out for some type of bounce here to retest some of these zones. So whether it's this, whether it's this, whether it's just up here, whatever it may be, or what if it's all the way a retest of the tops and we form a double top, right? So we have to see, well, we don't have to, but we're going to see inevitably some type of bounce here on the dollar, and I'm expecting it sooner rather than later, because it just probability here, right? That's what trading is. It's a bunch of probability, and I wouldn't be counting it out in light of such weekly and even monthly weakness, right? And on the daily, you can see that we attempted to form up a type of reversal pattern here, right? Forming a scoop and then actually really rallying hard out of this and then just completely plummeting. So we got hard rejected there, but we're still in the zone of value, which I genuinely would be looking at as the zone where we bounce, right? A 102. 102 is a very significant level for a while, and I would be looking at that as the bounce zone. And you can look at USD JPY, and we have the same bounce zone, and we're bouncing off that currently. Now, I don't quite like USD JPY's price action as it stands currently, but that's just a personal preference that I don't see any real clarity on the 4 hour, on the hour. We're trending pretty nicely here, but I don't see much clarity on the daily, 3-day. I just see this support and we're bouncing off of it, which is good to me, right? I see a lot more clarity here on the DXY. This looks a lot more bullish, like we can get a reversal here in a retest. But hey, that's just to gauge what the importance of the DXY is in light of the current situation for Bitcoin, SPY, and BT, and US 30. So I mentioned my Twitter a few times, and I'll just tell you guys about that real quick. So for any type of posts about whatever it may be, especially trading, especially new posts on our newsletter or our articles, then you can check that out at Boomish. You can check my Twitter here out at YQBoom, and you can check all our free materials. We have free trading guides, as we have a pullback trading guide. We have free materials such as trading journals you can just download and just take a look at, and they're all for free. There's nothing to sell you. We're not trying to get anything from you. It's really just free information about whatever it might be you're looking for in the crypto or finance market overall. All right.